Mentioned the unemployment figures there and how they stayed steady. Looks like it's going to be a very tough year for Australians and for the Albanese government this year. You've got the cost of living pressures, which the PM's now finally starting to talk about. You still have interest rates at a 12-year high, although you would imagine that perhaps we'll have some interest rate relief later in the year. The unemployment rate, as I mentioned out today, was steady, but 65,000 Australians lost their jobs in that December quarter. Judo Bank's economic advisor, Warren Hogan, joins me now. Always great to catch up with you. Can you explain why the unemployment rate, Warren, stays steady, and yet in that quarter, 65,000 Australians, I think it was, lost their jobs?
Yeah, g'day, Steve. Thanks for having me on the show. Look, it's a very volatile series, and what really drove those two outcomes was the participation rate fell from a record high by 0.4%, which I wouldn't trust that number in the month. But look, you need to look at the 2 or 3 month trends, and what we're seeing is a gradual rise in unemployment. It's at 3.9, up from a low of about 3.4 in the middle of last year. And in job creation, or the net gains of employment across the economy, has really slowed down in the final 3 months of last year. And of course, this is desirable. This is exactly what the Reserve Bank needs to see in order to sort of keep rates on hold and maybe cut them, as you said, later in the year. And it really is a reflection of a sort of soft landing for the economy.
I know you look at the broad picture, Warren, but are you getting increasingly concerned around the number of firms that are going into receivership and collapsing? I mean, particularly in construction?
Yeah, I think that's one of the real X factors for the year ahead. We've seen a surge last year. It's going to continue, I'm sure of it, in 2024. And what worries me is that the insolvency numbers have been falling, not just in the pandemic, but for the 5 years ahead of it. And I worry that we've sort of accumulated what I call zombie firms, or what economists call zombie firms, that is weak firms that survived because of low interest rates and various other things, but won't as the environment toughens up. And that's, I think, what we're seeing. And of course, it results in job losses. And of course, that is going to be a big issue. But in the other side of the equation, we've got a lot of job vacancies. There's still a very strong demand for labour. So I think 2024 is going to be a year of churn in the labour market. That is, these insolvencies driving job losses in some areas, but then people moving into other employment, we hope.
Let's play Reserve Bank bingo, which we do in the lead up to every Reserve Bank board meeting. Feb 6, they next sit round the table. Rates on hold last time they met. What's your prediction?
Yeah, I think they're going to remain on hold, and they're now only meeting every 6 weeks. So we've got February and then late March. And I think that the economy is playing out exactly as they've been hoping for and as they've been forecasting. So I think they're on hold for at least the first 3 or 4 months of the year. The big question is whether or not the economy continues to slow down, and of course whether inflation pressures continue to ease, this cost of living pressure. And it's not clear. It's happening, but we're seeing overseas some signs that inflation is remaining a little bit sticky. And of course, our interest rates are below what everyone else has got. We're at around 4.5%, and everyone else is around 5.5%. So we can't completely rule out further rate hikes. But I think at this stage, they're going to remain on hold for the next few months.
Good on you, Warren. Always good to catch up with you, mate. Warren Hogan there, Judo Bank's Chief Economic Advisor.